Good morning, folks, and welcome to Muck on the Markets. I'm Bob Lehman, your esteemed host. We are in the midst of a huge 3-day rally here, Muck. We're the long and strongs like you. Got to be liking this.
I do. I think overall, I think we're really. I think in certain names we were very, 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 very much beaten down. And it's nice to see those names rallying back. I haven't bought any put protection. Let me just say that I haven't bought any put protection for this rally. I think it lasts a little bit longer.
You're expecting good news out of the Fed then? The Fed minutes.
Yeah, I mean, I don't want to predict the Fed because I'm not a fixed income guy. That's I don't really get paid to do that. But I don't think they're gonna say anything about a rate drop, and I don't think they're gonna say anything about a rate hike. I think they're gonna say, we're gonna stay data dependent and look how things are, and kind of go from there. I think that's what the market wants to hear. I've been seeing on all my chatter, I've been seeing a lot of more people talk about negative interest rates, and I don't foresee that ever happening here.
Yeah, there was a very interesting piece, actually, that's in today's Financial Times, written by Martin Wolf, on just that topic. And it's an interesting piece. I would encourage people to read it, and just what impact that may have on banks and modeling and all that kind of good stuff.
Well, it would kill the banks, wouldn't it? Like, it would really hurt them because they're not making any money on deposits, and it would crush depositors, wouldn't it?
Well, my understanding, and even in my lifetime, I've never experienced it, but my understanding is that the rates that they'd pay out would still they'd still pay out some nominal amount, so they'd be actually losing money on deposits. That they wouldn't make the transition. So while consumers wouldn't gain anything, they may marginally lose, I guess, but just marginally. But I think that the risk would be more to the banks. And one of the things talked about in this Wolf article, I believe it was the Wolf article, was that as part of the bank stress test, the Fed for the first time asked them to model in some negative rates. So I thought that was interesting.
Yeah, I heard that being talked about a lot too. That the Fed was asking banks to model in on a stress test at negative rates. Sorry, I don't know what's up with my camera right now.
Yeah, I don't know what's up with anything that you're doing, pal.
Can you hear me at least?
I can hear you, yeah.
All right.
Any thoughts on crude?
I guess crude all comes down to if Russia and Saudi can get Iran to stop producing, it seems like that. But I mean, what I'm hearing from people is that Iran will not stop producing until they're back to pre-sanction era production, which is, I think they still have a lot more to go. So I don't know. I see a range of.
I'm sorry.
I think we're going to see a range of $25 to maybe $36 in crude, and that's going to be your wild range there. And have fun with it.
Well, you're more than halfway there then, because where we're at now, just over like 31 and change. I mean, I think that the statements were taken wrong by the market a little bit. I mean, I don't know. Maybe they think forced production cuts will come in at some point in time, but I don't think that there was any really belly up to the bar of any real rate cuts. They're going to maintain current production.
Yeah, I mean, they're definitely not going to. I mean, it was, I don't know, it was a freeze. Is that what we're saying it is?
Well, I mean
I
that they're
mean,
not going to increase any.
yeah, um, they're gonna freeze at max production. I mean, that's funny. Uh, I
I think so.
think,
Well, I think the market's reaction to it is funny. That's what I'm saying.
yeah. From what I'm, from just the way I take it, I think that the Saudis thought that a lot of U.S. oil producers, like shale and some of that, would be done by now. Um, I think their plan was to drive them out, close them down again, and then massively cut production, watch the oil ratchet up, and be happy about it, about keeping the U.S. oil independent. It's just that we just keep producing oil and we don't care.
Well, I think
Um,
well, I think the important thing is that the production costs of producing a barrel of crude via shale have been reduced such a vast amount. I mean, it
and
was
it happened really fast.
unbelievable, and thus, and my understanding is as well that in order if you shut down those shale wells, at the cost of restarting them, is quite significant. I mean, you're starting from go. But I
Yeah.
don't know. I'm not. I'm don't hold myself out as a crude expert. I just play one on TV. I mean, I know that Chicago Girl and I talked about this at length the last session I did with her, which was about a week and a half ago, I guess, or 2 weeks ago.
I mean, I did hear, I don't know if it was Venezuela. It was another oil minister of one of these big export countries that said he would rather sell one barrel at 50 than two barrels at 25.
Yeah, well,
So,
good luck having control over that. I mean, as you may or may not know, like in Libya, because of the political unrest, their production is way down. But people have just jumped into the lurch.
well,
Now,
yeah, because then, I mean,
I don't
hasn't
know what.
Iraq's been way up though? Iraq and Iran have been ramping way up. So, I
Yeah,
mean,
yeah,
it feels the shit.
yeah. Well, anyway, let's move to equities. I mean, I talk about that because in my long-term account, I'm long. One of my big long. I mean, I'm long really two big stocks, two big items, and that's Walmart and ExxonMobil. And ExxonMobil is just like printing cash right now. It's like
Well,
silly.
yeah, Exxon will always be a cash printer. Walmart, I don't know if Walmart gets back up to like its all-time highs where it was, but it's definitely, if you're playing for the recession, Walmart is definitely the one of the names to play.
I was
I
I was
mean, I don't
buying
know if it,
I was buying under 60, so I think I'll do okay. I think I'll be okay.
yeah, I don't know if it gets back up to 86 again, but I think it probably can hit, knock into those 75s, um, and go there. I've been looking at the banks. I know everyone hates them.
I don't, like I'm
But
avoiding the banks at this point. I did have, just to give you a little update. I was short Bank of America that looked like one bill to death, and I exited those puts. Shoot, I guess it was Tuesday very early. I just got out of them. I said, I'm up. I'm already have doubled my money on these things. Let me just get out and run away and watch. And if I lose further upside, so be it. And it
I
looks
mean,
like a wise choice.
Bank of America hit $10.99. That was his low. That's been its low so far. On my chart. I mean, I know it's been way lower. It's been in the $6. I I just don't think I'm willing to say, and people might crucify me for this. I'm willing to stake my flag and say that 2016 is not 2008, in 2011. I don't see it. I mean, the banks have gotten, their banks' balance sheets have gotten tremendously bigger. Okay, banks' balance sheets in the U.S. have gotten tremendously bigger. I don't know about Deutsche. I don't know about Europe.
Yeah, I mean, I asked. In fact,
they say they can. They say they can write down everything, and they say they can write everything off, and they say that their balance sheet's big enough to hold it. But who really checks that? I have no idea. I don't know. I know that when Goldman and B of A say that their balance sheet can handle, you know, a lot of losses at this moment, they have to be right, because there's no way that they're squeaking by the Treasury or the Fed at this point on not passing stress tests.
So Muck is endorsing the stress tests and say we're good.
No, I'm not saying that. I'm saying I don't think this is the situations where B of A goes below $8. I mean, where Goldman cracks the $100 barrier and goes down into, you know, free fall territory. It's not another I don't see another Lehman out there in the U.S. I can't say that Deutsche Bank isn't one. I'm inclined to believe that the biggest bank in Germany knows what the fuck they're doing.
Credit Suisse has problems too.
Yeah, but that Swiss banking system, is it really, like, you don't really know what's going on there. So I mean, they can say they have problems, and then all of a sudden, like, some random person could come in and throw in like $6 billion, and they'd be like, "Oh, we're fine." Like, you don't really know what's in those vaults. Like, all of a sudden, they could just crack open someone's safe deposit box that has been there for 100 years and find $1 trillion worth of gold and be like, "Oh, yeah, we're all solvent now because it was someone hid it there from World War II." Whenever the Swiss say anything about banking, I'm just like, what? I don't know. Like, I have no idea. It
certainly is opaque.
It's very opaque. But if you look at it during times of financial crisis, the Swiss always say that they're in trouble too. And then all of a sudden, miraculously, they come out of it unscathed. And you're just like, what just happened? Like, everyone else went down. The Swiss were like, it just always seems like the Swiss just kind of go with the market. If it's good times, they're like, "Oh, we're having good times, but not that great." But if it's bad times, they're like, "Oh, woe is me too." But they're always in the middle. They're just the Swiss. I don't know. I don't touch any of their banks.
Well, who do you like in the banking sector?
I like Goldman. I think. I wouldn't be buying
with these enormous moves we've had this week. I mean, nice.
That's what I was just gonna. I like Goldman. I like B of A, but I wouldn't be buying B of A here. I think your time was to buy it when it was around $11 a share. So, you know, last week I think it was you were all about it, like going like maybe Thursday, Friday.
Unless you time. What's it at now? 1250. 1250 plus. 1250 plus.
Yeah, around there. It was
unbelievable. 10%, I guess. It's up in a week.
I mean, I guess if you're starting a new position, I wouldn't mind. I wouldn't mind starting BOAC around 11. I mean, $12. Sorry, 12. You know, you're about 50 cents from where we are now. But I mean, if you had bought lower, you know, if you bought around under, you know, if you bought under 12 or even like 11:10, 11:30 or somewhere like that, I would might be covering a little bit. Maybe hope that it rallies past its moving day. The problem is that you're coming into major. I'm looking at the chart right now. I have a daily chart up, and all the moving averages are above you, and the big ones are above you too. So,
yep.
You're really hoping for a market rally to continue. And if you break across, what is this? If you break, I mean, there's two moving averages that are above you. If you can break 13, I think you're up to 15, but then you're going to get hit by a lot of big moving averages. Your 100, 200.
Yeah,
You know,
then I mean, but your reward to risk, as opposed to your risk to reward is quite significant, I'd say.
oh, I think it's huge. I mean, off the chart. That's why I said if you can get it 50 cents lower, I would buy it. I mean, you put, I don't, I'm not a big stop loss guy, but you put your stop loss at, $11 and you put your max buy at somewhere, 17. You got, because I mean, you got your major moving averages at 16, at 15, 1556, 1550, and then 1645 is the highest. After that, you've cleared them all. Yeah. So, yes, that's significant. That makes a significantly huge move to the upside to get near those. But I've seen crazier.
We've all seen crazier. We've all been around for a couple of years.
Anyway.
But anyway, what's your thoughts?
Oh,
I'm sorry. I didn't mean to interrupt.
I think at the time, if you look at, I think Disney is coming back into market leader. If you look at that, it's Disney's been on a slow and steady climb. When it crashed out about 86. Now it's back up at 95, and it looks to be putting on the moves. Under Armour's charging back. We became
that's some nice chart there on Under Armour.
On Under Armour, I love Under Armour.
I think again, you may be in a situation with Under Armour again, not terribly different than Bank of America, where your risk return ratio is a little out of flux.
Yeah, I could see it. We were buying Under Armour in the in the 70s, so we're quite happy where it is. But I think if you're gonna make a play now, for a more of a long-term play, I think Under Armour is the way to go. I think Under Armour is gonna end up beating Nike. I think Under Armours have increased in not so much the wearable space with the Fitbit, but they have increased. Under Armour now has an app with Fitbit, so you can put something in your shoe that links with your Fitbit, that links with your MyFitness, your MyFitness Pro, which is where you log your food into. Under Armour is getting way more into that wearable tech for athletes. Also, Under Armour's athletes are far better than Nike's. Kobe Bryant and LeBron James and Michael Jordan used to be cool in the day, but now it's about Cam Newton, Steph Curry, and those are Under Armour guys on long-term, very favorable Under Armour contracts. That being said, what?
Jordan Spieth in golf.
Yeah, and they have and when Under Armour signed these contracts with people, they got very favorable terms. That being said, Nike just did come out with a brand new limited edition pair of Kobe Air Jordans that are selling on, you have to request a pair to get even looked at for $200,000.
What?
Yeah.
I probably won't keep buying
them. Your son wants them.
Hell no.
Yeah, no,
right.
I think now is if you're trying to bottom tick like me, in certain names, I think now is time to lighten up a little bit. Or you could be crazy like me, and now is the time to push it, lever up.
Well, which is you, the one that takes some money off the table, or that put more on?
That puts more on. Back in my younger day, I'd be the guy who instantly called his broker, got more leverage, and slammed the trade on more. In my younger days, I tend to take about 25% off the table, just because it's not my personal stuff that I'm running. It's fam. So, you know, there's a lot more older people than I am that, you know, rely upon what I do. If it was me, I wouldn't care. I just slam it on right now. Especially caveat, I'd wait till after the Fed minutes. If we had good Fed minutes on, I would probably be slamming on. I'd be buying more Disney. You know, I'd be buying more IBM. I'd be buying the beaten up guys that are rallying and putting on more trades and making them bigger and see where it goes. I mean, but once again, that trade right there is a huge. Either you hit it out of the ballpark and you're by like Thursday, you're up a shit ton of money, or you're out.
All right, well, let me just ask you, but you touched on the Fed minutes. Let's just ask. I mean, I tend to think, my thinking is that they're going to be the same, essentially the exact same as last month. I don't think there are going to be any changes, but what do I know? What do you think?
I'm hoping that there's no changes. I'm hoping they just keep up with the everything's on the table. That being a bringing down the interest rate, a raising the interest rate, and we're going to stay data dependent, and we're just not going to do anything now. I think that would be the perfect thing in the market. Or as much as Fat Finger and Tweed and a lot of other guys are going to, KRS Capital are going to kill me, is that they just said, you know what, screw it, we're going to raise it one more rate hike, and you're going to have to eat it. Yeah, I think the market sells off pretty hard after that, but I think it comes back and rallies. Because I think the flow of capital to America, if they just slam one more rate hike in, would be insane. Why would you keep your money in Europe when you're getting negative interest rates and beyond negative real interest rates when you can come here and get 50 basis points?
Sure. All right, well, let's talk. Do you want to mute your microphone and blow your nose or something, because you're sniffling and somebody's doing coke over there. My man Muck. We'll move on to Muck's other ideas that he's thinking long and strong, because that's the Muck man. Long and strong, ever the Muck man. Anyway, Muck, you need to unmute yourself, I think.
Yeah, so let's talk about other ideas. Still long the infamous WWE, and been getting murdered in it, and been fine by getting murdered in it. I'm long. I'm long from 14 in equities, and I'm long 20 calls. I'm long the April 2016 20 calls. So I have a lot of days. You know, I think it gets over 20 going into WrestleMania. I think if it has a great WrestleMania like it had a great Royal Rumble, I think you see a huge pop.
By the way, we just got new highs across the board. Go ahead.
Yeah, there we go. I know Google's up 14, Amazon's up 14. But no, I think you see the World Wrestling Federation rally over 20, maybe to 21, 22. But I'm not gonna lie, I did listen to the conference call, and it did scare me a little bit.
What scared you about it?
They have put a lot of money into the WWE network, and it's $9.99 a month, and you get every pay-per-view. And they haven't cracked the 2 million subscribers yet. They tend to have something in the wrestling business. Muspet will agree with me. It's called the fall. They take sometimes off during the summer and some of that. You know, storylines kind of dry up. They lost 50,000 subscribers during that time, so they stayed plateaued at 1.25 million subscribers.
It's a pretty aggressive growth rate then that you're hoping for.
Yeah, but I think if they hit, all right, so they have the ability to hit it out of the park, and they also have the ability to crater back down at $8 a share, where their low was. a long time ago. I think you need to look at it as, I guess the fundamental comes down to is WrestleMania is $70 in HD if you buy it on pay-per-view. Or it's $9.99 if you buy it on the network. If they can't get more than 2 million people using this network, and last year's WrestleMania, or WrestleMania 30, when they had it only on pay-per-view before the network, they got something like 1 million pay-per-view buys. Would you rather have 1 million pay-per-view buys at $70 or 1.25 at $9.99? That's a problem.
Yeah. Now,
also,
certainly it's a growth problem. I mean, more than anything else, I think.
Well, they're growing the network. They're putting great new programming on the network, and so I think the network will solve itself. The problem is that WWE needs to realize they're not a movie studio and stop making really, really shitty movies that never make any money back. I mean, they've made about like 7 Marine movies, and the first one did okay with John Cena, but the rest of them haven't made any money. That's where they're getting killed. They put their WWE superstars in movies that they pay for and then don't make any money back on. I think if they cut that out, I think it helped the bottom line a lot. The dividend is still amazing, so that's always good.
But
yeah, that's.
I mean, what their debt can't be that significant, right?
Not really. A lot of it's paid for, but the company generates a lot of cash flow, so it takes care of itself.
All right, WWE next. Let's go to the next one.
Apple's broken that 96 mark, so it's I would say this is a stealth rally for Apple. I haven't seen many days where it's been up over $1. It's kind of just
can't seem
forcing it.
The way this market is going right now, it's at 97.50 almost.
Yeah, but if you look at it, it's just been I mean it's the stereotypical stealth rally. It's just been fighting its way back, 30 cents at a time every day, and that's something that I haven't seen in a long time in Apple, and I like it. Like just claw its way through everyone.
Well, I mean, are you looking for points at which to buy it again, or targets for sale?
We're changing the targets for sale more than we are points to buy.
What are you looking for there? 115?
Yeah. I think if you clear 108, you're solid to fight back up to 115. I know that's really, really far from the 97.5 that we're at, but I mean, there's not much in the way of stopping it. It's major moving averages. I mean, you got one at 100.45 and 102, but they're not that big. You got your big one at 108.91, and that's your 100-day. You got your 200-day at 111, and then straight shots to that 115 mark. I think that's where you can get it.
Now, when we pregame this, I talked with you quite a bit about what I saw as a rotation between those old strong players, and whether you start with Fang and add Apple to them, or you can add a couple. I mean, Google being the exception. A lot of those major movers, major drivers in the market seem to have lost favor a little bit. Any thoughts there?
Yeah, the FANG stocks definitely did take the brunt of it. Google, Amazon, Facebook. I think the Facebook sell-off was totally market driven. I don't know why. I mean, I think if you pull up the Facebook on a daily, it gapped up. It had those huge earnings, and it took off, and then it dramatically made it like a perfect head and shoulders, almost like a V to the downside, almost like a wishbone. But I think that was market. I think Facebook couldn't hold up as the only stock that was up 30% in a market that was, severely plummeting. So I think that's what got hurt. Now it's, it's poised to ramp up again. I just feel like I think we hit an oversold. I hate using that term, overbought and oversold, and too many buys, too many sells. It's just so cliche. I do feel that we threw the baby out with bathwater, and now people are realizing it, and those stocks are rallying back. I think it's gonna take an oil and financial rally to drive this market to the next level. I don't think just the FANG stocks can do it. I don't think technology can do it. I think biotech's pretty much dead at this point until the election. So I think you're gonna have, you're gonna need leadership from somewhere, unless everyone decides that F it, we're just gonna rack those FANG stocks up again, and they'll pull everyone along with them. But I don't see that. I think a new leadership needs to come, and maybe it comes from the old guard of, Johnson and defense stocks, and those guys rally through the roof, and then everyone's like, wow, new leadership. But it seems like they were really pushing the Google and the Amazon today, along with the Facebook. So,
well,
we'll see. I mean,
I've only got time today for one more issue because my dogs are making noise over here, and I'm going to have to deal with them. Any other one that you really like, that you're really looking at?
No, I think today is, as the Fed would say, today is very much data dependent. So you'll know what to do with today when everything comes out.
Yeah, I mean, I told you again in the pregame that I thought it was a very strange day. I expected a ramp up based on what we saw going in the overnight action and the pre-market action.
Yeah, I'm just hoping.
I'm sorry.
I'm just hoping that Ramp Capital still has a job. I mean, I know the guy was kind of Harry Carey there for a little bit. Every day was down. He didn't really know what to do. But hey, now it seems like we're back at that 330 ramp and have a good time.
He's not really real.
Oh, don't say that. He's as real as anybody else on Twitter.
He's like Mrs. San Lucci.
Hey, I participated in that auction, but my bid didn't win. I threw out a $1,500 bid, but I'm assuming I think the real Greg Gambetta was outbidding everybody on that, because he really needed that blackmail evidence.
That's unbelievable.
I heard the pictures went for a whopping $56,000.
Yeah.
So
nobody paid that.
No idea. Someone did. I heard it was an overseas buyer.
Well, anyway, we've got an interesting day ahead, Mock. We're what, 2 hours, a little less than 2 hours away from Fed minutes, and that'll be interesting. It's to me this run up is a little bit overheated. Fortunately, the short positions I had taken on, I took out, and not at optimal prices, but below or above what I paid for them. And so be it, we'll deal with it as it is.
Hey, that's what makes the market, different opinions.
That's right, man. Well, thanks, Mark, for joining us. We'll try to do it next week. Maybe on Tuesday probably is a better day for me next week.
Perfect.
All right, man. Adios, amigos.